evening, traders. Today's Friday, March 10th. And we've had one hell of a week, haven't we? Does it look bearish to you guys? What do you guys think? We're going to crash? What does the macro picture say that has been going on and that could happen come next week? Why don't we look at the macro picture? What we're looking at here is the October 13th low, the hive. It is a true statement, contrary to what I have seen on Twitter, that all we are doing is making lower highs, when that is actually a factually incorrect statement and observation. That looks a little bit higher than that, does it not? January, February looks higher than December. Higher highs. That so far looks higher than that, looks higher than that, looks higher than all of this. Does it not? Higher highs and higher lows. So you cannot say all we are making are lower highs. You must be referring to the last 2 weeks. But you have missed the forest from the trees completely. The key is this pink line. The comparison, look at this big blue line from December all the way to the pink line, compared to this one to the pink line. That's a whole lot smaller. Until this pink line, we'll just call it SPY 383. It's really 382.50, but by next week it's going to be 383. Until I see a clean rejection down from 383, down, meaning it goes under, back test, rejected down, then you can say it's now bearish. And until you can see that actually happening, you cannot say it's bearish. Because this is 5 months worth of data you're looking at that is factually higher highs and higher lows. So there you have it. That is not under dispute at all. You cannot say, no, that's not true. Because I'm going to show you in a subsequent slide the 4-hour MACD location of a vicinity to its bear line, -35, corresponds perfectly with the vicinity of SPY 383, this pink line. So, this is just the same tweet actually, where I say, yeah, the bull bear break line is SPY 383. Now, of course, typical of market maker, of course you can go under the line and then come back from over it. I expect that to happen, actually. I don't expect you to bounce right off the line, bounce and then go. I expect you to take it under the line and then come back up. Just like what you did in January, right here. You consolidated. Consolidate, consolidate, consolidate. Boop, here we go again. This was the hive. Up, above the line, come down beneath the line, boom, rocket up, boom, take it up, boom, come back down, consolidate, boom, take it up. Now we're coming back down to the line. I expect us to touch that line. I expect Monday and Tuesday to be that bottoming process. and then I'm expecting a full rip the other way. At the end of the day, when you're looking at this from a macro perspective, it's up, retraced, make a higher low, up, retrace, make a higher low. What's the next move? Up, retrace, make a higher low. That cannot be debated. These are always just higher low retracements for the past 5 months. That is a fact. That is not my opinion. That is a fact. Higher low retracements for the last 5 months. This is consistent with grinding up, a non-impulsive move. Non-impulsive moves don't crash. Impulsive moves crash. Melt-ups of those natures, too far, too fast, those crash. So there you have it. Okay. I showed this last night, actually. But this is, last night it was at negative 21. Now it's at negative 31. Negative 35 is the bear line. You see right here? Negative 35 is the bear line. That's at negative 31. That is oh so close to where SPY is relative to 383, isn't it? Yes, it is. I'm going to show you this pink line in more detail in the next slide, actually. Okay? So just put a sticky note on that. And until, as I've said last night, and I will say it again, until you go below negative 35, you're not going lower. And what have I also said in previous episodes? Typically, you have about a 90% retracement from your starting point. We're about there now, aren't we? For the last 5 months, we've had these ups and retracements, 90% retracements on average, approximately. Sometimes you can have 100% retracement double bottom, sure. But there you have it. So, the MACD is about to pivot in proximity that is about the same. That SPY is about to pivot off the 383 line that has held for 5 months. Only when SPY loses by rejection, not just going under it, because going under it is par for the course. Just like this. Here we go. Under it and then up. Just like this. Under this line here, consolidate, and then back up. That's par for the course. That's standard for the market maker. SPY has to get cleanly rejected off 383. Must be rejected off 383. Then I will call it bearish. Then I will entertain the talk of the next leg down. But until that happens, at this very moment, as of Friday, today's close, March 10th, that's still a higher low than in January. It's still. See what I mean? So, I mean, that's just it. As Kevin Bacon says in A Few Good Men, those are the facts, and the facts are undisputed. Intraday. I just have a few tweets to share. These are broken up by the hourly 65-minute uh, candles that I drew in here. Okay, right here. Oh, I'm sorry, right there. We were disciplined. Obviously, we didn't buy into this pump up here. We waited for opening bell. Come up. Actually, retake the EMA 50. I didn't go long here. I didn't go long here. I watched this, and I wanted to see this back test right there. Saw it. Went long right there. Okay. Come to find out, we all know what happened. It reversed. It reversed and came back and back tested this. So as you can see, I'm commenting. See, I actually we're very disciplined. We weren't just you know ready to jump on it. I was looking for lift. That's what I'm talking about here. There's the lift. I still want to wait for this lift candle to close enough just to be sure. So I wait for that to close. Then when I saw this next one up here, I was like, okay, let's try it. That's this one right here. Scaled long. Now, as it came back down, I'm watching this candle right here. This one. I said, guys, that last candle closed straddling EMA 50, 390.7 versus 390.73. That is a backtest failure. That's why I called that out. You straddled the EMA 50 line. That's a backtest failure. So I waited a little bit. I kind of wanted to see what the next candle was going to do. I was hoping to see. Did I say? Oh yeah, it could still consolidate under EMA 50. However, we need to watch for that. Okay, what I was looking for is this one seemed to consolidate, but I waited for this next one. I waited for it to close. I wanted to see, is it going to come back up and hug the EMA 50, or is it going to go down? And so I saw that. So basically, I got out like right here, right here. Yep. Before this candle got big, before this candle got red, it was still green at the time right there. So that was my gut telling me something's not right. I was hoping to see some consolidation. I didn't. Instead, I saw separation right here, separation between the EMA 50. That's no longer consolidating under it. It's separating, wicking down. I was like, oh no, that's enough for me. I'm out. I scaled out right there. Turned out to be a good move. Okay, so just go with your gut. If your gut's telling you something's a little bit off, you need to go with your gut. Chances are you're not going to regret it. So, at the time, I don't have the back D here. Well, at the time here it was creating a higher, oh, jeez, it was creating a higher low notch right there. See that? There's a higher low. It was. That's the key word. And this was after I had already scaled out. As this is the 1 hour chart, by the way, as it is creating the higher low, you're still going to go a little bit lower. That's just the way it works. So as it's creating a higher low, you're going to go a little bit lower normally. Unfortunately, the higher low notch was invalidated, and there's more downside. Yeah, the it was no longer a higher low; it was a low. The notch kept curling down. So that's when I got into puts. And then, yep. For now, we got to play the trend, and it's puts. there will be more follow through selling in the short term. What I'm talking about is Monday and Tuesday, because as of close today, the 1 hour chart, we did not even attempt to create that higher low notch yet. We're still kind of curling down. Well, no, we're kind of flattening out, but we haven't made the up move. You're going to make an up move and then a down move, probably overnight. So it's going to be an up likely on Monday. I bet Monday is actually going to be up, only to go down overnight and make an even lower low than on Tuesday. I bet it's going to play out something like that. You got to create that notch. That's the key. The battle line is the pink 383. That's what I'm talking about. Oh, it's right here. Here you go. There's your pink 383 line right there. Right there. Here's where we are at Friday. So yeah, I think on Monday it's kind of gonna go up, but then it's ultimately gonna go lower. That's what it's going to do, and I think it's gonna end up right at 383, something like that. Okay. All right. Here I'm commenting on this right here. That's when I sent out that tweet. I said, watch for this to fail, meaning I bet this is going to fail EMA 50, which it did. Here's the tweet at the time. I said, I bet that's going to fail. This move right here, this up move, is just a reflexive backtest move. Because you've come too far down, so you're going to come back up, back to the EMA 50, get rejected, and come down. Okay, so that's all it was. This move is to eat time off the clock, come back up, and so, but by close, it will go back down. So, yep, at this time, the 65-minute MACD, lower lows, it has not even started the process of a higher low notch yet. It's still flatlining. So, we still got a little bit more downside to go. So, yep, at the moment it failed right there. I got into some puts, as you see right there, right here. Oh, okay. So that's kind of it. That was, let me go back. That is pretty much the summary of today. Start off with calls, quickly got out of calls, jumped into puts. So, that's basically the summary of that. I think we are near the bottom though. Now, for those of you who feel bearish, you don't have to believe me. You can hold on to those puts if you truly do feel strongly we're going lower, then by all means, keep on hold those puts next week, because I think we will be at the conclusion of this higher highs and higher lows February decline, and we're going to start the bounce next week. Wanted to talk quickly about silver AG. So overall, I think silver has a few more weeks of, I'll say flattish. I'm going to call it flattish down decline. Not a lot. For the last year, yeah, it's been going down. But I think it's kind of it's starting to bottom, but I think it's got some more flattish down to go. And you're gonna here. So this is the weekly. I think the MACD. See what I mean? It's got a little bit more downside to go, a little bit more, to create a higher low, like where this X is compared to this. Because if you look at all this, this is lower than that, is lower than that. See what I mean? Oops. Let me go back. There you go. So, you know, we're talking about lower highs, lower highs, lower highs. See, this last move couldn't even get above this the um the zero line. But I think once it finds excuse me, a resting point, it's going to be that higher low that you need because you've had lower lows, lower lows, lower lows going back to 2020. I think though you're getting close. You're not quite there yet. You got a little bit lower to go. You're getting close. Okay. Let me look at the here's the 1 day, the daily. Now, having said that, see this? The daily just now crossing the MACD signal line right here. That's not a bad sign, but I think it's still early. It's still early. See that? You're so far from the SMA 20 line. That means you don't have a lot of momentum. So you're still trying to bottom. So because of that, you got a little bit lower to go. See what I mean? You're so far. You're not even like making a meaningful attempt to rip back up this way towards the SMA 20, let alone take back the EMA 50. You take this back, now you got a trend reversal. You're going to the upside now. But you are a long ways away from that. a long ways away. Because the daily is just now ever so slightly just crossing that signal line. Barely crossing it, right? You haven't seen that since, what was that, January? Yeah, January. Okay. So that's 3 months ago. But look at how far below the zero line you are. That's what I mean. So while it's encouraging that it's crossing, you're so far below the zero line. You've got just more, some more downside to go. You're too far. This was encouraging because it was so close to the zero line, but you never quite crossed it in January. Never quite did it, and then look at that. You've gone down since. So, if anything, silver right now in the short term is more of a shorting candidate than it is to go long. I wouldn't go long, not yet. It's still premature. So let's check out the 4-hour chart. Basically, since November of last year, all the way until March. See that? Lower lows, lower lows, lower lows, lower low, 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 low. Except now, higher lows. Right? Like for the first time since November 14th-ish, middle of November, you have higher lows. So that's a good sign. But I think it's a it's a good sign, but it's an early sign. You're still in the infant stages of just trying to, at least at the at the very least, stop the fall, but not necessarily bottom. You still got more to go. You got more to go. So yeah. So in general, I would probably agree with this midterm versus long-term bearish, but yeah, I would agree with that. You're still in some, I'm gonna call flattish down pattern trajectory, a flattish down trajectory. Okay, so that's all I've got for you guys today. Feel free to follow me on Twitter, where I give real-time updates, real-time game analysis. Don't forget to listen to your favorite music while you're trading. Helps you get into the right state of mind and the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00 Woe, signing off.